Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. 2010, right around the corner, and now that you've heard our analyst predictions about what they think is going to happen in the new year, let's get a little more specific with them and find out exactly where their investing minds are focused. Our editor-at-large, Steve Reitmeister, joins us once again, as does our Director of Research, Shiraz Mian, and top market technician, Kevin Matris. So let's get real interesting in the conversation now, and let's put you on the spot, get a little bit more specific. Steve, in the last part, you said that you were cautiously optimistic on the market and the economy. Market maybe see rising 5 to 10%. So what does that mean as far as industries and stocks that you're looking at for the new year?
Yeah, there's a few different themes that I like going into the year. One of them is value. I think that value was completely overlooked in 2009. In fact, it's one of the things when I keep looking at these stocks, they're pricing in such perfection in the potential for the earnings growth next year that a lot of them are not going to achieve that, and some of that premium will be pulled out of the stock. So I think there's going to be a much greater eye towards value in 2010 than we saw in 2009. Also, a theme that we've talked about here before, which is that there might be a little more flight to quality or flight to safety, and that kind of is usually a good mix for large cap stocks. But I think that if one just has a portfolio full of large cap stocks, they're going to be missing some of the opportunities. So I'm just saying, have a nice base of large cap stocks that will probably outperform folks with great balance sheets and earnings outlooks. But then you'll take your shots to get some growth coming from the small caps. But I think large caps will do fairly well. Some other themes, I think that what we call the early cyclical groups, things that are usually more manufacturing oriented. And I'll throw out a couple names. Illinois Tool Works is one that I think will do well in that space, because in the early cyclicals, once the revenue starts coming up, because they have such a high fixed cost that are set, that any increase in revenue creates margin expansion, it creates explosive profits. Celanese, with the symbol of CE, is a chemicals firm that is also an early cyclical. And Texas Instruments, which is in the semiconductor group, which is kind of the early cyclical of the technology field. I think that also the consumer, if indeed we see unemployment start turning around and heading a little bit lower, I think there will be a little greater confidence that people have in their well-being. Will start to spend a little bit more. They'll still have an eye towards not overspending and getting good value for their money, but I think we will see increase in consumer space. I have a couple stocks in that area that I like. I like Tupperware, and
because of the parties.
Because I like going to them. No, but also, over 80% of their revenue is actually outside the United States now, so it's also a developing market story with them. And then I also like Stephen Madden, which is a stylish shoe and accessories maker, but their price is quite reasonable. So it's a modest luxury, which is one of the first steps people take when they start feeling better about themselves. Like, it's just something to make them feel better. New pair of shoes, a new handbag. I know you like those things.
Absolutely.
So, those are some of the big themes. Resources, I've been a fan of them for a while. I think there's still opportunities there, but I'm not expecting raging oil prices to happen in 2010. But looking out the next 5 years, taking a position in oil companies still makes a lot of sense as the supply-demand story will get better and prices will get over 100 in the not-too-distant future.
All right, Shiraz, he dropped names. He was a name dropper. So what themes and industries are you looking at for the new year?
Not necessarily in disagreement with any of the major themes that he put on the table.
You can disagree. It's okay.
But it's fine. He's my boss, too, and I don't want to disagree
I was kind of hoping for a little disagreement.
Too many times. So generally, my sense is that the recovering economy and the greater visibility regarding the improving fundamentals drives the market towards more large cap, more established, and more of these settled names. So I'm looking for cyclical leverage in many of these stocks that I'm picking, and as Steve mentioned, they tend to be more industrial, more manufacturing oriented. I also want to layer on top of that a more export orientation in these names, because there is so much more strength and robustness internationally than there's going to be in the US and the OECD markets. So I want something like Caterpillar, which has a fairly established emerging market and global infrastructure investment leverage. I also want, like he mentioned, I don't expect the oil prices to be raging high, but I do believe that the long-term secular trend in improved and increased commodity consumption will become more established and pronounced as we go along in 2010. We kind of got off of that trend in 2009. We will get back on that. And just to play that theme, I prefer Joy Global, which again comes in the manufacturing as well as has a commodity exposure. And I like Schlumberger as well. Schlumberger has a fairly global footprint in terms of the oil field services and all these nationalized oil companies, as well as these global energy companies. A third thing that I want to briefly mention, my sense is that it's a relatively a contrarian call on the labor market. My sense is that the consensus view now is of a jobless recovery in 2010. I'm building my portfolio on a relatively stronger and improvement in the labor market than what's built in the market. And I would play that theme either with a retailer, like Steve mentioned, or with a staffing firm like Manpower or Robert Half International. So generally, not in disagreement with the themes that Steve outlined, but some distinctive layering on top of those themes, in my view.
Kevin, you're my only hope. I tried to spark some disagreement here, but failed.
I would say if I were to characterize my theme, it would probably be focused on manufacturing. So maybe that is slightly in disagreement. But let me say, I think 2010 in some ways is going to be easier than 2009, and in other ways I think it's going to be harder. You know, if you look at this year, they have that old adage that a rising tide raises all ships, and that was very evident this year. The strange thing is that you had a lot of junky stocks that really didn't have any growth lead the way this year. And in some instances, you had these stocks that really didn't have good fundamentals, almost outperform companies that did have good fundamentals. So it was kind of strange. In 2010, I think that is going to change, and I don't think the tide is going to be as big, so I don't think it's going to be raising all ships, which means I think stocks are going to rise and fall based on their own merits. So in that sense, I think it'll be easier because I think the market will make more sense, but you are going to have to be a better stock picker.
So individuals are going to have to make more individual stock decisions rather than decisions based on industries.
Right.
Playing the index will not be that attractive,
Right.
but picking individual stocks.
I mean, in some sense, you could just find a company, almost anything in March and April, and just get into it and hope for the best, and hoping seemed to be all you needed to be able to make money back then. But I do think it's going to be critically important to really latch on to the top industries, the top sectors, and the top companies within there. So before I came here, I wanted to look at what some of the top sectors were, and what is coming through my screen, and this is why I have this manufacturing slant, I guess, is you've got utilities, which is both electric and telecom, conglomerates, autos, tires, and trucks, along with transportation. Who would have thought those would be some popular groups, but they are. Consumer staples, basic materials, aerospace even, and then you have energy, both oil and alternative. To drop a couple of names, if I were to look at the utility sector, you've got companies like Public Service Enterprises Group. That ticker is PEG. And one thing that they do is they really try to focus on cleaner burning energy, and I think that also will be a theme for 2010. If you look at the autos, tires, and trucks, you have companies like Arvin Meritor. That ticker is ARM. And what they do is they provide refurbished OEM parts to the trucking industry, the transportation industry, and this kind of thing. For basic materials, Steve had mentioned a chemical company. I'm going to go the chemical route as well. A company like Cabot, they service a very diverse set of industries, anywhere from autos to construction, even to consumer products. And they also have a global footprint, as Shiraz was mentioning. For energy, though, like I said, you're going to look at the more traditional oil companies and drillers, and you're also going to be looking at the alternatives. If you're looking at a driller, you've got a company like Tesco Corp, and that would be ticker TESO. And I think a lot of the oil companies are going to benefit because I really do think that you're going to see higher oil prices going into 2010. I mean, there isn't really a huge amount of demand right now, and look at where we are energy-wise. I think that it's only going to get greater, and I think that is going to push the price of energy up. If you look at some of the alternatives like solar, you got companies like Covanta and Solar Fund. But I would say that there's a lot of hype surrounding these solar companies. Don't just get into this group blindly. Really, really study those fundamentals. Take a look at what these companies are projecting, because you have some companies that are doing great. Other companies look like just complete disasters on the chart. So you really are going to have to be extremely selective in that group. But I think the key here is that if you can focus on the top groups, I think that is how you're going to succeed. And I believe that you really have to go in with an equal dollar-weighted portfolio. Put the same amount of money into all of your stocks, put the same amount of money into all of these different sectors, and try not to overweight on any one area. If you find yourself overweighting an area that you think is going to be the greatest area and it turns out to be the worst area, you're going to ruin your year and potentially ruin your portfolio. And I think that proper allocation and focusing in on the top groups, now more than ever for 2010, is going to be one of the biggest keys to success.
All right. I didn't hear anybody mention healthcare. Anybody have any particular affinity for healthcare in the new year?
The healthcare fits in with my value theme because it's certainly one of the most depressed groups, because whenever you have uncertainty in a group, what will be the national health plan, or what is Congress going to come up with, then there's great question marks. Who's the beneficiaries? Who's going to lose out on that proposition? As it emerges, and it looks like we're getting pretty close to that, it will be clear who the winners and losers are, and then the people will start to emerge. Probably something like the generics is going to be a winner no matter what happens, and there's some decent value in that group.
Okay. We're almost out of time. Real quick. You have something real quick?
What I was going to say is for the healthcare, that's always an interesting area, but the way the healthcare bill is shaping up, I'm very worried about what they're going to do to Medicare. So for me, I'd probably be focusing on healthcare companies that get a smaller percentage of their payments from Medicare, as opposed to something that gets a huge percentage of their earnings from Medicare.
I should be more worried about that than you. Many points well made, many points well taken, and what we hope for you in the new year is that it is a happy, healthy, and prosperous one. From all of us here, Happy New Year. I'm Terry Ruffalo.